Hi everyone, let's go over my cycle, macro and high time frame bullish and bearish Elliott Wave scenarios on Bitcoin, starting with the cycle bullish scenario where we are looking for a buildup of 1-2s towards the upside, where you can see that the first wave 1 retraced around 86% of price, the second wave 2 retraced 84%, and the last bear market we had over here retraced 77%. In this particular scenario, wave 2 in green is in, and we are looking for another blue wave 1 followed by a blue 2, and then we're looking for continuation to the upside. If we look at these wave 2s over here, then you can see that the yellow wave 2 is a little bit shorter than the red wave 2 because of this vertical line. This vertical line is taken from this high to this low and then put on top of the yellow wave 1 to compare this red wave 2 with the yellow wave 2, and the fact that the yellow wave 2, this bear market here, ended just before this vertical line means that this wave 2 is a little bit shorter. While the green wave 2 is exactly the same amount of time as the yellow wave 2, meaning this one is a little bit shorter, which is also what you preferably like to see in a multiple 1-2 setup, because preferably each wave 1 and wave 2 is a little bit shorter in time and price compared to the previous wave 1 and 2. So this one is a little bit shorter than the red one. The green one, however, is exactly the same length as the yellow one. If we then compare the impulses, then we also see that this yellow wave 1 is a little bit shorter in time compared to the red wave 1. The pull is the same for this fib time over here. And we can see that the green wave 1 is exactly the same amount of time as the yellow wave 1. So time-wise, the yellow wave 1 and wave 2 are exactly the same amount of time as the green wave 1 and wave 2, which is okay for a multiple 1-2 setup. Again, preferably you see that the second wave 1 and 2 and the third wave 1 and 2 are a little bit shorter than the previous one, but at least it is not longer. Now, if we then look at the price area over here for a blue wave 1, then I have to toggle on the fibs over here that you see as well. Now, what you can see is that the yellow wave 1 is a little bit shorter in price compared to the red wave 1, which is something that you like to see, right, in a multiple 1-2 setup, where over here this one went to the trend-based fib extension 0.618, pulled from the low to the high of 1 to the low of wave 2. The green wave 1 is again a little bit shorter compared to the yellow wave 1 in price, right? That's what we like to see. Now, when we look at the dips to the downside from a Fibonacci perspective, the dips are getting a little bit deeper. So here we retrace to the 236, yellow went to the 382, and this wave 2 went to the 0.5 Fibonacci. So it does mean that even though percentage-wise it's going from 86 to 84 to 77, the dips do retrace more in a Fibonacci perspective. Now, if we look at this blue wave 1 over here, then the target area can be estimated around at 0.618 trend-based fib extension based on the previous highs that we have over here, giving us a target around 100k. I also put the 786 on the chart at 176k. Now, what I also like to show you is these bars patterns over here, because if we look at the bar patterns, then we can compare previous bull markets or the previous beginning of bull markets with the current start that we have over here. If I put this on current price section, that you can see that time and price wise, we're actually exactly on top of the bars pattern that you see over here. The only problem that I have so far with this move to the upside is, first of all, a little bit of volume, but not necessarily that's the main thing. It is seeing a bigger dip towards the downside, because this purple wave 1, 2 and continuation was a retracement to around the golden pocket, 705 golden pocket area, as I measured before recording this video. And that is also a solid retracement that you like to see for a wave 2 and then continuation to the upside in a bigger wave 3. Now, if we look at the COVID structure over here, right, this structure from the COVID low, then clearly we have a big retracement, and on a weekly time frame, we also retraced over here to the golden pocket, right? Wave 1, wave 2, big 3 to the upside. And the most common target area for a wave 2 is the 0.5 to the 0.786, but at the moment we have not yet seen such a retracement, and that is the only obstacle for that bullish scenario. If we then zoom in to this structure over here and we go to the macro, then here is the count in green, 1, 2, 3, 4, 5. Wave 2 is then finished in likely a WXYXZ for a wave 2. Now it has to be said that a WXYXZ is a rare corrective structure, especially on higher time frames, but there's not really any other way to count this properly and end a correction over here being the wave 2, looking then for continuation to the upside, looking for that blue wave 1, and therefore we're looking for the green wave 3, where we're now currently moving to the upside. If we then zoom in and we look at the daily high time frame scenario, then we're looking for a double 1-2 setup. We have a wave 1 over here in green, followed by a running flat in a wave 2, where this wave 2 retraced to the 0.302 taken from this low to the high of 1, which is a less common target for a wave 2. It is a target nonetheless, it's just less common, as also shown on the higher time frame just now on the cycle count. Preferably the 0.5 to the golden pocket is the area for a wave 2. This one is shallow, and then you want to see another move to the upside. Second wave 1 in this blue wave 1, then looking for a wave 2. So we're basically waiting for this structure to be finished, right? And of course, with the daily updates, I keep you informed about what is happening more locally, but we're waiting, right, for this wave 1 to be finished. We want to see a bigger move to the downside, where then the target area is preferably again between the 0.5 and 786. Now, if price moves to the point of control, which is a very, very, very high time frame point of control of this range over here, and would halt somewhere here and then move towards the downside, then the targets 05 to the 786 are between 31.8k and 27.9k. Now, what you don't really want to see in this scenario is price losing this white box and the blue lower line over here. The white box is a very, very important support resistance area. Support, support, resistance, 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 eventually going through to that point of control. The value area low is also, of course, an important support resistance area, and dipping below this area, or at least dipping below, is not a problem, like a wick below, close inside and continue, but you don't want to see like weekly candles and all sorts of daily candles ranging below this value area low and this support resistance area, as then you're going to get back in this range over here. Now, after wave 2 is in, we then want to see continuation to the upside in a bigger wave 3. If we then zoom out and we go back to the cycle time frame over here, the monthly time frame, and we look at the bearish scenario, then in this scenario we are looking for a finished wave 1 structure. We have a 1, 2, 3, 4, 5 wave structure over here in a bigger wave 1, looking for a much longer multi-year wave 2 to the downside. Now, in this scenario, you can see over here, again, the first structure retracing 86% and the second retracing 84%. And this now becomes quite important, because if we think about the bullish scenario where this drop and this drop are wave 2s, well, for a wave 2, it's common to retrace like 80-something% or 70% or 60% of the previous move. For a wave 4, of course, 84% dip is actually quite deep, right? For a wave 4, it's not really what you like to see for a wave 4, but on these time frames, on these high time frames, it's definitely a possibility, like also in the stock market. And what is interesting, that the 382 has been very nicely respected, taken from the low to the high of this wave 3. The 382 is a common target for a wave 4, perfectly hit for a move to the upside, where if we look at this wave 5, the 1.618 is the most common target for a wave 5. You take it from the high of 3 to the low of 4, and then the 1.236 to the 1.618 is your most common target area for a wave 5, which also here twice is very nicely respected. In this scenario, we are then looking for a wave 2 to the downside. Now, when we look for a wave 2 to the downside, on the lower time frames, preferably the 05 to the 786 is hit, but that would give us here a target of $400 to $20, which of course is very unrealistic. So on these higher time frames, just like what we see over here with this wave 2, preferably the maximum target is going to be the 236, which we see over here, which is sitting at 6k as a maximum target for this wave 2, and also stay above this low over here is definitely preferred, which is sitting at 3k to 3.1k. If we look at time, then a wave 2 most commonly retraces at least to the 0.382 or after the 0.382 for a low. So the 0.382 is taken from the low to the high of wave 1. Preferably a low is made after September the 1st. Or basically September 2025. I also put the 0.236 on the chart because it is an important Fibonacci level nonetheless, which is sitting at April 2024. So we have to observe what price does, but preferably the low of a wave 2 is going to be made somewhere over here around that 0.236 or maybe even a little bit higher for then a move to the upside. If we then zoom in to that macro bearish scenario where we are looking for that red wave 2 to the downside, right? We are currently working on a three-wave structure to the downside in an ABC. So instead of counting this a WXYXZ, we can also count this as a five-wave structure. I mean, both work, to be honest, for a wave A. You can also have a WXYXZ in A, but also an A, B, and then a wave C, right? Doesn't really matter. But in this particular scenario, or by the way, if this is a WXYXZ, we have to label this a WX and then a wave Y. The thing is that for the target of a wave Y or C, it doesn't matter how you count this to the downside, right? Because the most common target for both the C and Y is going to be around this golden pocket anyway. So here we are looking for a corrective structure to the upside in a wave B, where we want this wave B to reject between this point of control and the 786. The point of control is just below the 618 at about 38.7k, and then we have the 786 at 50k. So basically 38 or 39k to 50k is the very important resistance area for price for the high of a B, and then the low moving to the downside for a wave C, where you are going to break this important support resistance area, which is what you like to see in this particular scenario. If we then look to the downside for wave C, then we have the golden pocket over here taken from the low to the high in perfect confluence with the value area high of this multi-year volume profile, sitting between 10k and 8k. Very, very important support for price. Remember, we have the 236 at about 6.1k, but preferably we're actually not even reaching that area. Preferably we're going to stick around this area, find support here, and then look for a move towards the upside once again. If we then go to the daily time frame and we zoom in to the bearish scenario here, then we both have an ABC and a WXY on the chart in this particular scenario, which then ends the bigger wave B, and then we're looking for that big wave C to the downside, right? So here we have an ABC or a WXY, and you can see that actually time-wise I have a difference between an ABC and a WXY, and I will explain why. Now in this scenario, before I explain the time difference here, the 0.382 taken from the low to the high of A or W is a common target for a wave B or a wave X. Remember earlier I mentioned the 0.382 is less common / rare for a wave 2, but common for a B or X, meaning that probabilities increase for any move to the upside to be a wave C or a wave Y, something that we have to keep in mind. Now, why do I have different color boxes and the vertical lines? Those are Fib times taken from the low to the high of A or W and then put on top of the low of B or X, is that if we are working on this being a wave C, then preferably we're already in wave 4 territory, move up for a wave 5, and then we want to see a move to the downside. So it won't take that long anymore for a wave C to finish, and not long means weeks, right? We're not talking about a couple of hours or days, we're talking about a couple of weeks, because this target area here for C is now sitting between the 9th of December 2023 this year and the 2nd of February next year, with a price target of between 40.4k and 44k. If we think about a double zigzag WXY, where we then have a three-wave structure W, X running flat, looking for another zigzag to the upside in a wave Y, then we want to first see a big move to the downside, continuation up, preferably also again a 5-wave structure, right? An impulse 1, 2, 3, 4, 5. Target is exactly the same for wave Y over here, and then you reject to the downside. And the wave Y target area, because you first need to finish the impulse, then move down correctively, and then move up again, it's very likely this wave Y will take longer than the 1-to-1 of this W over here, which gives you a wave Y target between the 2nd of February next year and the 1st of May 2024 for then a rejection and a move towards the downside. Now, if we then look at the probabilities of the different scenarios, we can actually keep it quite simple. I first like to say that, of course, the local price action and the daily updates I do, that's what's going to decide the probabilities on the higher time frames, right? The lower time frames are much easier for probabilities than the higher time frames because it takes so long. But if we do look at the probabilities, then very simply, this retracement to the 382 from an Elliott Wave perspective, because, you know, for me, it doesn't matter if it goes up or down, right? But from an Elliott Wave perspective, the 0.382 is a common target for B or X, but a less common / rare target for a wave 2, which means that probabilities-wise, any move coming from the 382 to the upside has generally a higher probability of being a C or a Y, which means eventually a move back towards the downside. Now, in both cases, it is important that we are looking for a retracement. Of course, in a wave C, we're looking for a move down. In a wave Y, we're looking for a move down as well. But also in the bullish scenario, we're looking for the high of a 1, and then we're looking for a 2 and continuation, right? So a 1-2 continuation looks very much like a W or a zigzag, A, B, C in wave Y. And then it is all about this move to the upside over here. If we get a move down and then we move back towards the upside, this is going to be the decider over here that decides the probabilities, which I do with the daily updates. It's going to be a wave 3 or a wave C, which also means if this is going to be a wave 3, we want to see volume coming in. And so far, if we look at the volume, it's quite disappointing. No, volume is moving down as price is moving to the upside. And this should be your second wave 1, second wave 2, continuation to the upside. And especially if you start this move, volume has to come in, right? We definitely need some high volume moves towards the upside. If volume is slacking and this move is taking a while as well, grinding to the upside, well, you know, it increases probabilities for a move to the downside. And on the cycle and macro, well, we have to observe the reaction between 40 and 50K because it's all about what is happening on the lower time frames over here, the daily and lower, what I do, of course, with the daily updates. I hope that this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.